Hello. I just want to review this last exam that we had, and I want to go over some of the entries that I asked you to do. All right, so let's start it. First entry was additional capital from the partners, and this was to be done in a journal entry. I told you to do it in a journal entry, and that's journal entry. And I'm going to show you the entry. I'm not going to do the entry. I'll show you the entries that were done. Okay, so here's the entry. Now I combined everything into one, but the entry is debit to cash, credit to capital. I think some of us forget that we're doing accounting. Debits have to equal credits. This was an addition to cash, debit to cash, credit to capital. Okay, so that was the first entry. The second entry was we billed paper store for $11,000. So how do we do that? It's tasks and sales invoicing. I told you where all these entries were to go. So if we just take a look at the entry that was made. This is the entry that was made. Sales invoicing. You're making an entry billing our customer, paper store, for this GL account, for this amount, for this issue, January accounting, $11,000. Okay, that was that entry. Then the one that seemed to really give us problems was the one where we're paying the staff. Now we pay the staff, just pay the cash. We're not withholding anything. And we did this before, but it's like we never did it before. A lot of us treat it that way. This was just a payment. Bills, you can go to payments, you can go to payments or pay bills. We'll go to payments. Okay? And let's look at what was done. List. And let's see which one I want to select. Which first one? 2010. This was the payment to Bob, the accountant. So let's just double click on that. And as I told you, these are not vendors. So we just put their name in here, in the name line. Can't put it in the vendor line because they're not vendors. So it's just a payment to Bob for $6,000, and we need a GL account. Can't do it unless there's a GL account, and this GL account is wages, salary, but it's a GL account. Okay, we need a GL account. All right, close that. And of course, we did the same thing for Mary, and then we did the same thing for Jane. So we wrote those checks out. And then we got payment from Paper Store for the work that we've done, and we billed them. So we received $7,700. So we go to tasks, and we receive money. Okay, let's do the list. Let's look at what we've done. And this is the entry. Double click on it, and you see this is the entry. Okay, so we received $7,700. We put it in the amount paid, and gave you all the reference numbers and so on. So this is where this entry went. $7,700. We received money. Okay, something that we've done before. And another entry that we seem to have problems with is accruing. All accruing means is that we're taking the expense for a period of time, and we haven't paid it yet. That's all. That's all that means is we're accounting for an expense that we have incurred but haven't paid. So we're accruing it, and we do that in bills, pay bills. And so we go. I'm sorry. We do that in purchase, receive, inventory. Getting me confused here. Purchase, receive, inventory. That's where we accrue things. All right. So we go to list, see what we've done, and let's look at this one. This was the first one on the list. Bell rental. Okay, so you can see that we paid this, but this is the entry that we made. This is how we make the entry. It's January rent, GL account, $6,000. We're accruing this rent expense. GL account is rent expense. And then we did the same thing for the other two vendors, Verizon and Con Ed. Okay? Something that we've done before, and basically it's accounting. If I was telling you to do this with pencil and paper, you wouldn't have any problem doing it. Doing it with Peachtree makes it even easier. And then after we've accrued expenses, we can pay them. We have to pay them. We just accrued them, and now we are going to pay them. And we do that in bills, pay bills. So we go to tasks and bills, pay bills, pull out the list, and let's see, check number 2013 is the first one. Okay, so I told you how much to pay, $1,800 on the check. I gave you the check number. If you recorded this correctly, then the invoice comes up and you pay the amount, and that's it. Simple amount. Just put the amount in and it's done. Okay. Bills, pay bills. Then we paid each partner $6,000 for January draw. And again, these are payments. You can use it in the same window. This is payments, bills, pay bills, payments, same thing. I told you it was check number 2016 to 2018. This is the payment. Now what I did here was I put them all together. So I put the three together. But again, they're not vendors, so again, their name goes on this line. So you would have put partner 1, partner 2, partner 3, three different checks. Checks 2016, 2017, and 2018, but they're still payments. And they go against the draw. The debit is to the draw. Payments are debits to something, an expense, and a credit to cash. Okay? So it's accounting, right? It's accounting. And we never touched this area over here. Right? Some of us were writing checks to cash, and that gets no entry at all. And then in the next month, we basically do the same thing. We just repeat what we just did in period 2. Okay? So this is Peachtree. Please look at this. Please understand it. Please review it, because you might see this again before the end of the semester. Okay? Or at the end of the semester. Okay? Thank you.